Nolan Beanlands, welcome to the It's Not That Deep podcast.
Thanks for having me.
Thanks for coming on, man. We've been trying to schedule this for a little while now. We finally found this nice little spot.
Yeah.
It's nice and quiet. It's great to finally sit beside you. I was gonna say across from you, but it's good to finally chat, man.
Yeah, good.
For those who don't know, you are the executive director at Capital Angel Network,
Yeah.
a not-for-profit organization of angel investors who've helped over 60 businesses generate $35 million in funding since 2009. I'm not sure if those numbers have changed.
Yeah,
but
they're up now. We're very close to 100.
That's
we
incredible.
We were at 92 at the start of 2020, and usually we hit about 10 a year. So we're absolutely on track to hit that. But with COVID, it's slow. Or our new investments have slowed down a little bit. I think may still get there by the end of the year, but will be to be determined at this point.
Well, congrats, man, on your success already so far with that. I had a feeling those numbers would be out of date, so happy to hear that. You've also previously ran the University of Ottawa Startup Garage program, as well as Founder Institute. It seems like you have a lot of experience in this space of, startups and helping accelerating businesses at the very beginning of their career. Why don't we start by asking or telling people what your mission is? What's your mission with all these different things that you've done?
Ooh, that is a pretty deep question right off the bat. But no, I think so. From a personal standpoint, from my life situation, we're set up in Ottawa here for a long period of time. Me and my family. I grew up here as well, so I'm very attached to the community. So I want to continue the mission that many other people have been doing as well to make Ottawa a wonderful place to build and grow a business. I've really enjoyed being part of all of these different programs and initiatives because I find learning about the world through the eyes of entrepreneurs is a really inspiring thing to do. I can share a little bit more, but I definitely stumbled into this world. It wasn't a linear path to get there. But I've certainly enjoyed being a part of this ecosystem. I think it's a fantastic one, and I want to do my part in advancing it and continuing to make sure great companies are started and continue to grow here and have the ability to become global companies based out of my hometown.
That's awesome, man. There's so much to talk about right there alone, but starting with the Ottawa connection, it's near and dear to your heart, it sounds like, and this city often gets a reputation, as you've heard me say before on the podcast, of it being a boring government town. We have that reputation, that stench that, hey, everyone here either works in the government at some level or for a big bureaucratic organization of some sort. So what was it really about startups in particular and new budding businesses and helping entrepreneurs that you had to scratch that itch yourself?
Yeah, so like I said, I stumbled into this a little bit more than most, where there's a lot of entrepreneurs, or you can tell they've been entrepreneurs intentionally or unintentionally from a very young age.
Yeah.
I've always been interested in innovation and new technology, but even going back, I've always found myself broadly interested in a lot of topics. Even when I did study engineering in my undergrad, I chose a program that was actually touched in a lot of different areas because in 17-year-old me picking a university program, I didn't want to just be an electrical engineer or a chemical engineer. I wanted to continue learning about a lot of topics, and working in these from accelerators to with the Angel Group, I get to learn about all types of businesses and all types of industries. And there are very few roles that are designed as a generalist role this way.
Yeah.
And I found that's really what I wanted to do. But it was very hard for me to pinpoint how I could do that, especially as a new grad. The first opportunity that I really had to do that was working at the University of Ottawa in the technology transfer office, where their role is really commercializing the intellectual property that is developed at the university. And that's across all faculties at the university. So we're dealing with biotech, we're dealing with civil engineering, we're dealing with electronics and all types of material science. And so there's a huge range of knowledge that is needed. And that was something that my degree, being a fairly broad initial undergrad degree allowed me to apply that knowledge and that experience a little bit more broadly.
Right.
But then through that that office, they also ran the early stage entrepreneurship program, and I discovered kind of a new type of innovation, or a new way to be innovating, and rather than deep research from a university, but much more along the lines of new venture creation. And I think it certainly helped at the time that I was a fairly recent grad. A lot of the entrepreneurs themselves are in their early 20s, or they're in undergrad or in a master's program. So from a demographic standpoint, it was much more relatable for me to be working with those companies. And then through that program, I immersed myself into the Ottawa startup community, and I really loved it. And that's I found my community there, and that's something I'd say I've been searching for since high school. I really enjoyed my time in high school. In undergrad, I think I struggled to find a true community to be a part of.
Okay.
And there was a big gap in time where I missed that, and this kind of startup community that I have now been a part of and continue enjoying being a part of was one that I really enjoyed first discovering and now immersing myself into.
That's really interesting how you kind of kept things open, and you wanted to kind of have a breadth of understanding and knowledge of a bunch of different areas, with engineering, which right when I hear engineering, I right away think of depth, like someone wants to become the expert at mechanical or whatever, those ones that you're talking about.
And I'll be honest, it wasn't as intentional. I think it was subconsciously I wanted to be a generalist, but practically I wanted to be employed. And I realized around my third and fourth year that I was very unemployable, because although I took many courses in electrical engineering, the electrical engineering student is still going to beat me out for a job because they've got so much more expertise, and rightly so. So I was looking for roles more in sales or consulting, or something that you needed this kind of generalist arc.
That's what I thought right away when you said that, is like consulting, because that's usually the field that a lot of people get pushed into.
Yes, and I went pretty deep with a couple organizations in interviews, and almost completely went down that route.
Yeah.
And it could have been I may have ended up here, and may not have. And I'm very fortunate and feel very happy that I've found my community that's really encouraged me to excel. Even though myself not really ever being an entrepreneur, which is something that I've personally been, I think I was more self-conscious of earlier on in my career in this community.
Yeah.
But realizing that I've found a way to turn it into an asset for my own sake.
Well, why don't we talk about that a bit, because that's definitely something that when you're entrenched in this community of people who are self-identified and are entrepreneurs, but you're still in a position at a nonprofit. There has to be a little bit of that at the beginning, like, well, I'm helping these entrepreneurs secure funding, get everything going, but I am not like exactly an entrepreneur. Or do you see it differently? Because I don't know, I'm not familiar with the role at all.
So, and again, the other buzzword is like an intrapreneur, right? So someone who acts in an entrepreneurial way within a large organization.
Do that a lot.
And there are certainly a wider population of people who are like that, who don't like the bureaucracy, or who don't like this very different things that are so robust, and are a little bit more creative and think on their feet and try to act in a lean fashion. And so I sometimes associate myself with that, but not all the time. With respect to not being an entrepreneur, I think it's understanding, just being very aware of that, and knowing that, respecting that generally the entrepreneur themselves are the expert in their business.
Right.
They should know their customer. And I think it's a big red flag for me if I think I can run someone's business better than they can.
Yeah.
And I'm not supposed to be the expert. I could understand the market a bit more. So that's usually someone that I'm not keen will be successful. Whereas there are a lot of people who come from different backgrounds, and there's a reason, or a question that we always ask usually in a pitch is, why you? Why are you the person to build this business? Because most of the time, unless there is a lot of deep technology involved, many of these ideas and business models could have existed 2, 3, 5 years ago, given the current status of most technology. So why hasn't existed? What have you figured out? Why is the timing right? Et cetera, et cetera. So I think from my own perspective in not being an entrepreneur is, I guess the other layer to understand is just be really empathetic.
Right.
I think a lot of the time people who aren't entrepreneurs don't understand what it's like to, put your entire life on hold for something. I think there's the challenge of, people not being empathetic of, what it's like to make payroll, what it's like to deal with investors and customers, and understanding that they're doing the hardest thing. The entrepreneurs are the ones who are really putting everything out there and respecting them above everything else. And again, there are certainly, just like in every group of people, there are entrepreneurs who, aren't the best people or who take advantage of this sort of rebellious nature. But for the most part, these are exceptional people who are the outliers in our society that will lift everyone up and lift entire communities up. And supporting them that way early on and showing them that level of respect, they usually give it back to you. And that's what I found extremely rewarding in becoming a part of this community and helping, whether it is your job or not really your job to do so, is a great way to build trust. They definitely have their guards up, especially if it is even at the early stage, we'll call it a successful early stage entrepreneur who seems to be checking a lot of the boxes, winning some, the pitch competitions or getting some early investment. They, not to say that their ego goes up, but they're becoming a little bit more popular, and I think our ecosystem is very good at promoting even those companies that are at an early stage that may not warrant the hype yet. But then there's a lot of people who try to leech off of that and find a way to take advantage of those, particularly young entrepreneurs. And so they certainly have their guards up around people who don't get it. And finding a way to kind of break those walls down and connect with someone, I think is an important way to engage at that stage.
Well, that's huge, man. And even from like the way you answered that question, I could tell you have a very high level of what you mentioned there, empathy, and really understanding exactly where these people are coming from. And, whatever industry that is or that they're in or that they're trying to break into, it's really having that level of understanding that, hey, I am not running your business. Like, I'm not even trying to do that. I'm just trying to help you run it best.
Right.
And giving you whatever you need or the opportunity to get whatever you need. That's a huge thing, and that must be very fulfilling for you. So talk to me about that journey a little bit, how it's been going from, I guess, what were you calling it at Ottawa U, where it wasn't quite startup garage yet? It was
It was the technology transfer office. And, now I believe it's called Innovation Services.
Okay.
And that office again continues to operate and does a lot of great things for the university and the community that way. But with the Startup Garage program that I was a part of, it was again dealing with extremely early stage entrepreneurs for the most part. And frankly, I think it was a little bit of learning on the go. The first cohort I did, I really was learning the same thing. I was in the sessions and training and taking just as many notes as the entrepreneurs were. It's trying to stay a week ahead of the lessons, sort of. It was almost like I was TAing a new class that I hadn't taken yet, and over time getting a better understanding of both the ecosystem and who is who and who wants to help and who can be helpful, understanding where they can get funding, and then having seen the journey of a dozen companies in one cohort, I could then replicate that because a lot of the time it's the entrepreneurs care most at the early stages. Yes, they have to deal with their own customers and industries, and that's something that's harder to help with as from a generalist side of things, but you can help steer them towards different funding and pitch competitions and opportunities. So seeing a company that had some success in one cohort, you can try to replicate that with a few others, and even going from companies that in certain verticals that might not go the VC or angel route, but are more of an e-commerce driven company, and we'd have a couple of those every year, and trying to match those entrepreneurs with the next generation, and seeing how that was always a helpful cycle to be a part of, and trying to get us to know as many people within the ecosystem, and keeping those the one generation of entrepreneurs connected with the next one.
Right. sounds to me like a lot of your role has to do with kind of pointing people in the right direction once they make it into the program. But how does an entrepreneur or a business even apply to get funding or get help within the platform?
Right. So from Startup Garage's side, again, that's my previous role that was focused on primarily Ottawa student, either students or recent grads who are starting a business who are relatively early stage. They have an annual application process. Even yesterday, I was helping out with the most recent cohort. They were showing me their pitches, and they're doing this latest cohort's a pretty strong one. They've got a lot of good companies that given that I know the stage and previous cohorts of where the companies usually are, they've definitely got some good potential. And companies that are already launched and rolling and have some revenue, and so that cycle, I guess, is coming to an end for that program right now, and the applications usually open up at the start of every year.
Okay.
So that's for Startup Garage. For the Capital Angel Network, we operate on a roughly monthly cycle where we do have member meetings or pitch nights. We're a pre-selected amount of companies. Usually it's about 3 new companies that we look at. Obviously we're doing everything over Zoom right now, so it's a little less fun, but it's still working. The angels are still investing, and the process is still, we still have a product ourselves, and it's great to see that the angels are still leaning in despite not having a bit of that personal connection that you can kind of get in getting to know a founding team. And so you can always apply online. There's a link on our website on capitalangels.ca. Typically, though, I recommend that they connect with me so that I can do a bit of filtering of figuring out if they should be applying for funding now, if they should be applying for funding a little bit later in their journey, or if they shouldn't be applying for funding at all.
Right.
And I think that's one of the misconceptions that I do still try to project, is that most companies aren't set up to be angel invested or VC backed. You see a lot of PR about those companies, so I think most entrepreneurs that just look from the outside, it looks like that's the only path to success.
Well, yeah, they watch Dragon's Den and they watch Shark Tank, and they think this is how business works.
And you read TechCrunch, and you read, even in the OBJ, which is a great promoter of our companies and our stories. But there are tons of businesses that are completely bootstrapped that do fantastically well on their own. And that's okay. I think there's a bit of a stigma of being part of receiving investment as this big stamp of approval. I think it helps, but really what you're saying every time you receive funding is just, here's an opportunity to execute on your goals and on your plans. And usually the factor that limits a lot of companies is that for angel investing to work, you need these kind of outlier hyper-growth companies. The angels themselves need those returns to make up for all the losses because a lot of companies they're going to invest in are not going to make any money, or they're going to lose their money. So they need these outliers. So every company, when they're making the initial investment, has to have that potential of this hyper-growth. So if it's a nice company that's growing, 100% year over year, nicely bootstrapped, that's usually not the path for this exponential success. And so that's really something that a lot of entrepreneurs need to understand and be okay with, and that's sort of why I try to engage and steer them to the right time. It's also so they're not engaging with our group too early in the process.
Right.
It's not ruining a reputation or a relationship, but just wasting both their own time and the angels' times, and so that when they do engage, it's really at the best time for both the investor and the entrepreneur.
So one of the best things they can do there is connect with you and kind of get that feel, and obviously go through the eligibility criteria on the website, right?
Yes.
Which generally speaking, if obviously don't go through the fine details, but what are some of those, generally speaking? Right.
To make a good company generally for angel investment. So, like I said, it's got to have the potential for kind of a 10 times or more return. So if they're raising money at a $3 to $5 million valuation, you have to believe that in a period of time that company could be worth north of $30 million, right? And if it's really not if there isn't that growth trajectory within, a 7-year period, then it just doesn't make sense.
Oh wow, not even 10, 15. It's
we'll say 7. Yeah, well, that's the most optimistic.
Yeah.
Certainly right? Angel investments that take 10, 15,
Yeah.
17 years to return. But at least optimistically, when you're the best case, if the best case isn't there,
Right.
then it doesn't really work out very well.
Well, it's really interesting that you mentioned that, like, you know, the mindset there is like you want one big winner, and then it kind of makes up for the losers.
Right.
What's that like? I know you can't really answer this question, but generally speaking, what's the breakdown on that? Like, how many, just from your experience
Right.
and from being entrenched in this world, how many of these kinds of businesses that do end up getting funding not work out, not be successful?
Right. So and within our portfolio, and which is very Ottawa based, let's say we're approaching 100 companies. So from that sample size, we've had 8 or 9 exits, and that's varying from, you know, a 1.5x to, I think, a 13x is our highest one. So that's also part of the challenge too, is that the 13x certainly returns most of your losses, if not all of them. A 3x is good, but doesn't fully return the portfolio. You need another winner or two to really make up for the other losses.
Yeah.
So just under 10% have exited successfully. We've got about 14 companies that are completely dead, probably about another 5 to 10 that are, I'd call, walking dead, where they still exist, the company operates, but it's unlikely that they will provide even a 1x return.
Okay.
But the company is still running a business and employing people, which is still a benefit to the economy and the ecosystem.
Right.
Then we've got, again, we'll say 20% that have just, you know, been in their fairly recent in their fundraising, so really haven't gone up or down. And the remainder, and then probably another 15%, and maybe I'm not adding these numbers up correctly, 15% have gone and raised their next round, so more of their seed. So that, you know, there's an increase in valuation, there's more investors have come in, there's been a positive progress that way. And then probably another 15% have really gone, call a Series A round and beyond. So that's a significant upgrade on the valuation.
Right.
And continue to grow beyond that.
It's really cool that these are like for me, growing up in Ottawa, like these are Ottawa companies, even though, you know, we're looking at, you know, relatively small sample size, but still very big impact. It's cool to see that, and even the failures or the ones who didn't make it.
Right.
It's cool to see that there are that many entrepreneurs in this city who did even take that risk, who did get that far. And like, to me, that's actually, that's a net positive. That's still a good thing.
Yes, and you can still see that, yes, even though the companies that did fail, many of them have started another business.
Exactly.
Right? They live and they learn.
Yep.
And for the most part, the angels are forgiving about it. They understand that this is how it works.
Yep.
If you get into angel investing and you get really, and there's a way to, you know, not be successful. You can fail more gracefully. Some fail more gracefully than others.
Yeah. They're crashing and burning.
Right. And yeah. So there's a certain way to handle it. So it's not that it's all completely always forgiven, but certainly most of the companies that have not been successful, those individuals, if anything, they've learned things. They've used the capital that our group invested to hire people and create jobs, even for a short period of time, or sometimes it's a 4 or 5 year period and it doesn't pan out.
Yeah.
What might be interesting too is many of the failures range in terms of stages.
Okay.
It doesn't necessarily, just because you make it Series A or Series B stage, doesn't necessarily mean that that you've made it. Companies, you know, continue to have challenges at every stage of growth.
Absolutely.
So that's another kind of element to it that's not as known. And again, I'd say you're impressed with the number of companies. This is just over a 10-year period of time.
Exactly.
And there's still also a number of companies our group didn't invest in that were started and had success.
Exactly. And that's what's exciting to me. You know, it's like there might have been, I don't know the numbers, but like, let's say 10,000 people, like businesses applied over this whole term, you know. And out of the 100, it's still cool to see that there were investable companies, ideas born here in a city where that's not always the forefront of what people think their options are. for their career, for their life, for their business. So I think that's really interesting right there. And then one of the questions I want to ask is, what is like the criteria to become an angel investor? Like at what point do you become an angel investor? Like what makes that from
so
just an everyday investor to
from a high level, from a legal perspective, all of our members have to be accredited investors,
right?
So that they have a certain level of income or wealth.
Okay.
I can list those off if that's helpful.
Yeah. Let's do it.
So in terms of income, it's either $200,000 in terms of annual salary or $300,000 combined with your spouse.
Okay.
And then either $1 million in liquid assets,
okay,
or $5 million in total assets.
Cool.
So it's still and at least again, even in a city like Ottawa, like a $300,000 combined salary with a spouse, that's certainly a pretty.
It's doable.
It's a doable floor.
Yeah.
Typically, though, the way the angel investor ecosystem is set up, you have to have a bit more money than that, or it's easier to be investing if you have a fair bit more liquidity to be deploying, and rather than if you're just at $301,000 in income for a household, and lots of that's going to taxes. It's hard to just not throw away, but invest a $25,000 check into a company that you might not see any money ever, or a return for 7 to 10 to 14 years time.
That's really interesting.
So that's the legal answer. Like I said, there's usually a certain bar that you want to be above. The unspoken number between both the entrepreneurs and the investors usually is that per individual investor, they'll invest about $25,000 per company.
Okay.
And this is kind of this magic number of large enough for the entrepreneur to be, it's worth courting them if they're raising, a $250,000 or $500,000 round. And on the investor side, it's small enough that most investors have enough capital to diversify into a lot of companies.
Right.
Right. So if the angel investor strategy is really just to invest in one or two companies, they might want to put larger checks in and get a bit more involved. And we've seen that style as well within our network. But typically, people are writing $25K or $50K checks to be investing. So that's in terms of the money and the capability that way. You can always, if you don't have that amount of, if you aren't legally accredited, you can always invest in kind of friends and family rounds. So if there's people and that's typically the minimums are lower there, whether it's 5K or 10K, they'll kind of take whatever they can to start dabbling a little bit. You can also look to be an advisor within companies. And a lot of early stage companies need help. They need and it's a way to give up your time necessarily if it's particularly in a domain that you have some expertise in, right? Someone like who's a professor at a university who has a lot of expertise, makes $170K a year, and doesn't have that kind of deployable liquidity.
But he's got the knowledge, and he's got
the knowledge and the interest to be entrepreneurial. That's a good way to start, and that's something that you can easily, just like angel investing, spread your advice across a few companies, get yourself involved there, and earn some good money, or possibly a good return on even your time spent. If the company is successful. And again,
that's a really big point.
All it takes is one or two successes to really change someone's status that way.
Exactly, and it's super fulfilling as well for both parties. Like it's almost like mentorship in that way. It's like, what, like me personally, I can speak from having started my business, less than 6 months ago, and growing it and learning a lot and wearing a million hats at once and trying to do too many things at once. It is good sometimes for me to be able to call up some of my CEO buddies or some founders or investors or people I know who have done something like this, and just pick their brain. Hey man, how do you deal with this? Or hey, I've never had to deal with splitting up equity and this and then doing this and having a shareholder agreement and doing these kinds of things. Like I've never done these things. And then legal, accounting, HR, just a million different things that you have to think about as the leader of a company. So it's very that's a big point there, is that like sometimes, like, as good as money is, as good as funding is, it's not the only metric or the only thing that makes a business, I think, successful. I think that, obviously leadership is a very big part of it, but having the ability to get help you need in other forms as well. So that's been important for me. So kind of one of the next questions I wanted to ask you was, what are some things that you've seen in successful companies? What are some common patterns that you've seen that make them successful, that you think, and obviously it's hard to pinpoint one or two things, but generally speaking, a pattern of success, like companies that you've seen successful, whether you've worked with them or not, what is it that they have in common?
Probably one, and again, personally, I'm not an investor, but a trait that I would look for if I was really actively doing it is kind of continuously getting things done. And there are certainly bumps and pivots and things that come up, but the entrepreneurs that I love is that every time, if I see them even on maybe a couple months, it always seems like there's progress being made.
Right.
And there's certainly challenges in entrepreneurship, so it doesn't always have to be linear. But it's it's the ones that don't come up with excuses, who are just continuing to grind, and because it's going to be hard, right?
It's that consistency.
If you're wasting energy making up excuses, exactly, it's consistency. So and when it comes to angel investment, this is going beyond my own view. Is more of what I've seen from our investors. It's really what you're doing is you're entrusting someone to deliver on a plan.
Mm-hmm.
Right? They're not necessarily talking about going all the way to an exit, right? That's a very long view to be able to take, but it's that, and I don't know if you've covered kind of storytelling in your previous episodes with anyone, but obviously I think this is a very important piece within is you tell the story of, this is where we started, this is where we are today.
Yeah.
Now we need some capital to get over here.
Yeah, this is where we want to be.
This is where we want to be.
Here's how you're going to help us get there.
And the more consistent, and if the story behind it makes kind of clear sense, it's very easy. And if you've been engaging with them previously, then that story becomes much more believable. Mm-hmm. So then when you look forward, that there will be, and again, it doesn't have to be a straight line, it will go up and down, but that they will do what they can as a team of entrepreneurs to execute on what they're trying to do, and that they will spend your money wisely in delivering that, and not just wait for a bunch of money to be able to do something. They'll just continuously do that. So I think that's the trait that I find most interesting, is the ones that are consistently delivering, not really coming up with excuses, and stuff happens all the time. There's all kinds of stories as well of the company was this close to closing a deal, and with a huge multinational, but then the CEO got kicked out, or this person got fired, and then the whole thing fell through, and the company just completely. So the number of very unfortunate things that have happened, but the people who still continue to grind through and execute and continuously deliver something are the ones that you can entrust so much more easily with the funding to at least get it somewhere. And again, it doesn't always end up being this kind of unicorn outcome, but that they will continue to make progress.
Right. I think that applies to so many things in life, right? Yeah. Showing up constantly, no matter the things that might be outside of your control, might even be in your control. Things happen, we're imperfect, we all have stories, and as you talk about storytelling, there's you hear these stories of people who've overcome such insane adversity and do amazing things with their life. But then you hear the same story of somebody not being able to overcome that adversity and not be able to show up, not be able to do the things that it takes to move forward in whatever area of life. And so I think that's a really important lesson, beyond entrepreneurship. It's sports, it's relationships, it's everything. You can apply that to everything. So thank you for sharing that. That's awesome. I like that a lot. What's a success story that you would like to tell or are able to tell of one of the companies you've worked with?
So again, probably one that and you've actually had a few of the guests from a few of the different companies. Also, I think a company called Rewind, and Alaman was actually the one who made the intro. They're doing very well for themselves. So what they do is they provide backups for all kinds of small business apps, particularly Shopify stores, but also QuickBooks and a few other software tools. And they continue to have success. And I think it's the culture that Mike, the CEO himself, has built. It's very, it's not the sexiest company in the world. It's not the coolest product in the world.
I know when Alaman talks to me about it, it's kind of funny. It's like almost like an insurance thing. It's
right. It is an insurance. It's insurance for your
e-com store. Yeah.
Right. For your e-com store, for many businesses, is their most important asset.
Right? It is.
There was a bunch of hype this week around the Gymshark team. Right.
Yep.
This guy
they hit $1 billion, right?
Right. Hit $1 billion valuation. That's an e-commerce company.
Yeah.
Through and through.
Yep.
Right. So securing that most important asset is an increasingly important piece.
Yep.
But Mike, the CEO, he's much more low key than most entrepreneurs. You won't see him in the press releases or the hype. He doesn't talk. They don't talk much about themselves. They just continuously execute.
Right.
And I think that culture is built from the top down.
Yep.
And those are the people they've hired, and they continue to execute on what they're doing. And going back to my point before is that, whether anyone was looking or not, they were getting stuff done.
Even during the whole pandemic.
Right.
Especially
and to be fair to the pandemic, I think e-commerce has moved,
blown it
it's
up.
gone from, it's moved more in the last 3 months than it has in the last
10 years or something.
But prior to the pandemic too, they continued to execute and work hard and not be too showy. And that's a very, I'll call it, Ottawa's a boring city. Like, Rewind's not the most exciting type of company, but it's getting the job done. It's working hard, and that's one that's also too for a period of time did not take a lot of investment, and I think Mike, even they had 1,000 customers already before he actually quit his job.
Okay.
Or something along those lines. I'd have to go back and confirm that, but it just shows that they were really, going to this in a calm way and not trying to,
force anything.
Anything. Exactly. Actually, that's perfect. Force anything.
Yeah.
So that's one that I do like. You had Corey from the Grocer on, so that's a completely different type of company. I worked with them more at Startup Garage. This has been a long grind. Like they had, they you can talk about stuff going wrong. They had, what was it? One of their
shipping containers?
One of the shipping containers was supposed to go to Churchill, Manitoba, right? And there's only one railway to that town. And
I remember the story.
Right? I'm sure he shared it with you, and it was flooded. So it was like I think it wasn't their first sale, but it was one of their early sales. Was completely delayed by months because of this natural disaster that was completely out of their control.
Yep.
And even more impressively, Corey and Alita were still in school for the first 3 years of building the company.
I'll never forget.
And no one would kind of forget, no one would have thought that. They are engaged. Whereas I go back to my undergrad and it's like, there's no way I could have started a business. And I think that was a bit of, going back to where I respect the entrepreneurs, is thinking of my own undergrad of like, these guys are crazy. These guys are like, they're starting a company.
Yeah.
They're not even in like sneaking out of fourth year. They're still completely.
Well, to add to that, he was also the president of Enactus at the time.
Right.
So, on top of that, and I just remember, and I'll know this side of things a little bit more because I'm good friends with Corey, but we'd be deadbeats in that little office, just like, man, I got this project due or this assignment due, and it's like not down at all.
Right.
And he'd have for whatever reason, he has a MacBook, but his keyboard stopped working. So he'd have this keyboard, like the Apple keyboard that you'd buy, on top of.
Oh, yes, I think I remember seeing
and
that too.
I just always remember like clowning him for that. But he's just like, dude, like I'm broke. I'm working. I'm basically full-time working for Enactus, building this thing, and full-time in school.
Yeah.
And I was like, man, dude, you're gonna go so far that I'm never gonna forget this keyboard.
Right, and again too, also like, I'd say both Corey and Alita.
Yeah, Alita too. Incredible.
They weren't fazed by it.
Nope, they just handled it.
Right, I would have been a nervous wreck. I would have been so no one would have enjoyed being engaged with me if I had that much on my plate.
Right.
And I don't know if that's just how they are. And again, that culture, that kind of relaxed culture, or relaxed is the wrong word, but just
calm
demeanor
yeah
is actually more critical to entrepreneurship than anyone I think realizes. People think it's all about hype and taking over the world, but because things will go wrong, right? Things like a natural disaster interrupting a major sale.
Yeah.
That you've just got to be ready for it, and if you're not in a place where you're calm and can manage it, then it's not going to then the company's not going to succeed, or your employees aren't going to work well for you if they're stressed that way about things.
I think a big thing there is being able to manage stress and manage the things that are inevitably going to break and be on fire and go wrong. And this is something that I can't talk about myself in that those guys level at all these people who've done amazing, incredible things, built crazy companies. But what I'm learning just day to day trying to build this thing is just being able to step out of the situation and almost view it from a third person view.
Right.
And almost remove your emotions from something, because we all have emotions. We're never going to stop having emotions, but just all right, well, what's really happening in here, and how can I deal with this? How can I best deal with what's going on here? And it's a skill that's very tough. We're not taught how to do that. It's something that you have to almost teach yourself through. And that's I learned this from people, and this is why I love chatting with people like yourself and having people on the podcast who I know have been able to figure that out.
Yeah.
And figure that kind of side of things out, where it's I can remove myself from a situation and just figure out how objectively are we going to get this done.
Yeah.
Anyways, I know it's kind of raining a little hard out here. I hope you don't mind.
Yeah.
We'll wrap this up shortly.
Yeah.
I have a few more questions for you. I don't mind getting a little wet, but I hope you're okay.
Okay. I think the phone's nicely in the pocket, so we're good.
There you go. One of the questions I wanted to ask, for you is, from some of these people that you've seen, and some of these leaders and founders, CEOs, investors, all these different types of people who are leaders in their field, what do you think makes a great, effective leader?
Yeah, that's I think it's knowing, a lot of times knowing what you know and knowing what you don't know, right? And understanding what to do yourself and what to delegate. I think that's really, it's kind of responsibility management, and and again, it's still taking ownership of things that
the outcome
wrong,
and
right.
Yeah.
I talked about kind of giving excuses or throwing team members under the bus or things like that. It's obviously employees and things still have to take responsibility for certain things, but if you're a leader in an organization, you have to understand what needs your attention and what you can pass along.
Absolutely.
and being fairly self-aware that way.
Great answer. One of the final questions I'll ask you before I wrap this up and we do our lightning round is, what's next for Nolan? Sorry, that's your name. Nolan.
Yeah.
What's next for Nolan?
So again, I think just for now with Capital Angel Network, at least, continuing to handle the challenges and the ups and downs with COVID.
Yep.
Making sure that our group continues to be active, and there's a lot of talk at a high level, right? If angel funding gets depleted, you're destroying a generation of entrepreneurs.
Right.
So I think that's critical at this stage. I again love the ecosystem that I'm a part of, and I want to continue contributing to it.
Yep.
And there's a few different types of roles that still fit that thesis, right?
Right.
You asked, the first question you asked me was kind of my mission. So there are a number of roles that could still allow me to execute on that mission, whether it's staying more on the investment side, whether it is working within a company. But I'd say I'm not. It's given the number of companies I see, it's rare that I'm really, really interested in one.
Okay.
And that I would have to narrow down and be a part of that.
Yeah. You still like the general?
Yes, I would. I think I've, and again, I haven't even gone. I've thought about it a little bit. I've flirted with those ideas, but it's still something that I would really want to. I'd still have to love doing the everyday stuff for that very specific role, depending on what that company is doing. and or again being part of the ecosystem in another way. So yeah, there's a few. That's sort of what's next. But again, continuing with my main thesis of building and growing the city and staying within the kind of innovation economy, I think is where
I mean, and I think that's like another like buzzword, but something that is very real is your why. Like that sounds to me like that's the thing that keeps you centered and grounded, and like whatever it is that I do in whatever capacity, it still relates to that. So that's really cool. I've loved this podcast. This has been awesome. Cool little scene as well, and
a little wetter than your other recordings.
We've definitely been battling the elements today, but the fact that we made this happen, awesome. I'm gonna finish off with 2 lightning round questions, and then we'll be good to go. So, what is some of the worst advice you've heard people giving young entrepreneurs out there?
Don't vest your equity.
Okay.
That's just terrible advice.
Okay. Solid. Love it. And then the best advice that you could give to 20-year-old Nolan.
20-year-old Nolan. Go find your community.
Go find your community. Love it, man. Thank you so much for coming on the podcast. Where can people find out more about all the things that you're up to?
Yeah, so LinkedIn, Nolan Beanlands. I think I'm the only one out there. Twitter, it's at Nolan Beanlands as well. Capital Angels, I think it's at Capital Angel Network, but it's at Capital Angels on Twitter. LinkedIn as well for those two. We're not much on Facebook or Instagram. And capitalangels.ca is our website.
Awesome. Make sure you connect with this guy. He's awesome. Thank you so much for coming on the podcast.
For having me, man.
Just remember, it's not that deep.